single day. And once we get better at understanding these different things, and once we see that the community has gotten a little bit more maturity when it comes to these different things, we'll talk about the different types of models, right? There's different types of models that happen from 10 to 11. For example, Silver Bullet, the Judas Swing, things of that nature. Again, it can get complicated, but once you're able to identify this, in my opinion, liquidity sweeps, order blocks, and fair value gaps, the models you're going to train, you're going to trade them without even knowing, because the opportunity is going to present itself right in your face. So definitely wanted to mention that. So you mostly use the 4 hour or hour, and what causes you to switch between them? Great question. So I mean, I always do my top-down analysis, right? So I look at what's going to be my weekly bias, and as you can see right now, the weekly bias is still looking bullish, to be very, very honest. Price is coming down to a weekly fair value gap that we have at the moment, and price is looking like it's still holding above that 50%. So I'm thinking that we still have the opportunity over the next couple of weeks to take over the high, right? And we got a lot of fair value gaps here that we have at the bottom. After that, I look at my daily bias, right? So my daily bias, a lot of consolidation, price is definitely coming down. But again, we have another bullish fair value gap that we're currently respecting. So I would not be surprised if we probably come down one more time, take this liquidity out, faking people that we're probably going to get hit lower, and then come right back up and take that high, right? But again, I do have my liquidity levels already plotted. I have my previous week, my previous day, and then after that, what do I care about? I go to the 4 hour time frame, and I'm looking to see, do we have any sort of fair value gap? Well, right now, yes, we got a small gap right here at this moment, and price is actually at that gap. And then on top of that, with the move down, what did we do? We left behind a fair value gap here at the top, a bearish fair value gap here at the top, right? So I'm plotting my bearish and bullish fair value gaps. And then after that, where am I going? I'm going to the 1 hour time frame to see, is there anything that I'm missing? And again, one of the critical things about trading this way, you must annotate. So I'm going to put here 4 hour B for bearish, and then fair value gap, and then it's going to plot it right here. So even if I go to my 1 minute time frame, I'm able to see that fair value gap, right? When price goes into that fair value gap, I want to know what's happening. So that's what I typically do. And again, in the morning, I go to the 15-minute time frame, highs and low of the London session, and then I'm going down to the 5 minute. And what am I doing? All I'm doing is looking for fair value gaps. Okay, do we have any? Okay, and then after that, I'm going to the 3, and I'm dreading anything. And then after that, I'm staying in the 1 minute. 1 minute is where I trade at as of late. And honestly, I've been seeing some pretty good trades, and I actually like it on the 1 minute rather than the other time frames, to be honest. But again, I'm using a top-down analysis to formulate my bias, and then to also give me some perspective when it comes to where the imbalances are currently at when it comes to price.